Welcome to RANsquawk morning briefing for Thursday, the 10th of September 2009. Just coming to around 9 o'clock now in London, so a quick recap in the overnight news and where we stand at the moment. Starting off firstly in Asia, a couple of headlines to be aware of coming out of China. Economic conditions are not yet right for China to exit its active fiscal policy, as according to top planning official, the NDRC. Separately as well, according to the FT, the DPJ warns of big cuts to stimulus. Hiroshima Fuji, the man widely tipped to become Japan's new finance minister, has called for substantial cuts to nearly 15 trillion yen economic stimulus package being implemented in the world's second largest economy. Elsewhere, a couple of US pieces of news to be aware of that did happen overnight last night. Starting off with some Fed speak from member Fisher, who said that Fed's unconventional program make unwinding process more complex. Fisher said that the pace of Fed's policy reversal cannot be predicted, and says does not think the US will see a double-dip recession and that US full employment is a few years away. Separately as well, for anyone who wasn't around in terms of European listeners, the Fed's Beige Book revealed that 5 of the 12 district banks note signs of improvement in the economy. Taking a look elsewhere as well, just to recap in terms of the second of the week's auctions from the US, we saw the 10-year note yesterday, $20 billion worth. Came out relatively successful. The yield, or drew a yield of 3.51%. The bids to cover there was 2.77, which was above the average for the 10-year issues. The indirects of 55.3%. Again, we'll be eyeing the 30-year a bit later on in today's session. That'll be at 6 o'clock London time, midday in Chicago. Elsewhere as well, US mortgage foreclosure filings in August hovered near July's record highs despite broad efforts to keep borrowers in their homes, and will probably rise for another year according to Realty Track. And just a quick recap in Europe, we've already seen ECB official Liikanen on the wires saying euro area has bottomed out and sees higher jobless rate though and government finances deficit. Taking a look in terms of geopolitical news ongoing from that document that Iran handed over to Western powers yesterday, the Wall Street Journal writes that Iran offers little in their latest nuclear proposals, citing unidentified diplomats who have viewed Tehran's plans. Elsewhere, in terms of overnight, the Reserve Bank of New Zealand, they kept their key interest rate on hold at 2.5%, reiterated that rates will be kept at their current low or low until late next year. In terms of WTI crude futures, we are off to a positive start there, trading higher, around $1 at the European get-go. We did see quite bullish API numbers after the NYMEX pit close yesterday. In particular, API crude oil inventories for the set fourth week showed a drawdown of over 7 million. Obviously, eyes will now be towards the DOE oil inventory levels we'll see later on this afternoon at 4 o'clock London time. Elsewhere, for the UK markets, obviously much of the focus today will be on the Bank of England interest rate decision. That'll be due at midday London, 12 o'clock. Coming out of the Times was their MPC piece. They said that the Bank of England should carry out its threat to penalise high street lenders by cutting the interest it pays on cash held by them in its reserve accounts. That was according to the Times MPC recommendation. The plan, though, was muted last month by Mervyn King, the governor, as part of his efforts to encourage lending to inject more money into the financial system. However, 4 of the 9-member panel of the economic experts on the Times MPC thought that the bank should press ahead with the plan. Otherwise, they were pretty much united as to the general market consensus in terms of interest rates to remain on hold at 0.5%, with the asset purchase program to remain at 175 billion. The Wall Street Journal as well, adding to some of the speculation it did do the rounds yesterday, saying that some economists believe the Bank of England might opt to lower the interest rate that banks get paid on reserves held at the central bank to encourage them to use the extra money it is pumping into the economy. Taking a look in terms of equity news, at the moment we are trading higher in the UK and Europe, following the 2% gain we've seen in Nikkei close, the best performance there in around 2 weeks. We're up around 0.8% in the DAX in particular, seeing slight outperformance being led by 2 of the major banks there, in particular Commerzbank and Deutsche Bank. Commerzbank reports are they've risen their most now in 2 months on plans to return the remaining €5 billion of unused debt guarantees they've received from the country's Sofin Bank Rescue Fund. Obviously, it could signal news as well that Deutsche Bank could likely follow suit. Again, those 2 banks outperforming. Commerzbank shares at the high were up 11.5% this morning. Elsewhere, just a note, Morrison's, they also reported in the FTSE this morning. First half pre-tax profit came in at 449 million sterling. That was above the expectation of 357. and they see like-for-like sales in the first half up 7.8%. A couple of broker moves as well of note. European oil and gas sector, Morgan Stanley raises to attractive from in line. And also for the likes of GlaxoSmithKline, even in spite of that news that did come out after market close yesterday that the FDA approved their Cervarix vaccine effective for preventing cervical cancer in females, they have been downgraded, which has put a bit of a dampen on that news. Cut to sell from hold at SocGen this morning. Taking a look then in terms of the calendar, as we head towards 9 o'clock now, we're looking out for the ECB's monthly bulletin and to see whether indeed that does match the Trichet conference after the ECB rate decision last week. We'll then look out as well for the IEA publishing their monthly oil report. Also, we'll have at 10 o'clock the Italian GDP, midday, as mentioned, the Bank of England interest rate decision. 1:30 from the USA will be trade balance, initial jobless continuing claims, and then we'll have the Canadian interest rate decision at 2 o'clock. A couple of changes for energy traders due to the Labour Day holiday on Monday. We'll see the EI natural gas storage change at 3 o'clock, followed an hour later by the DOE oil inventory numbers. A couple of speakers to be aware of this afternoon. We'll have Novotny, Lockhart, Geithner, Kruger and Cohn due after market. And then we'll see that final of the week's US auctions, the 30-year note, $12 billion worth, 6 o'clock London time, midday in Chicago.